This is a beginner's guide to how the tax-free allowances work for savings. And it's all based on this question I got. Martin, can you explain the personal savings allowance? Is it in addition to the personal allowance of £12,570? And what about the £5,000 allowance? I'm confused trying to use gov.uk. I can. Go with me. When it comes to savings, there are actually three different allowances in play. The personal allowance, the personal savings allowance, and the starting savings allowance. And you get them all on top of each other in the right circumstances. So let's run through them one at a time. The first is the personal allowance. That is the amount that you can earn from any source, not just savings, interest, pensions, from work, from anything tax-free each year. And it's typically £12,570. If you earn above that, you pay 20% tax on the next amount, any earnings above it, until around 50 grand. Above that, it's 40% tax until around £125,000. Above that, it's the top rate of 45% tax. There is a slight quirk that once you start earning £100,000, you begin to lose your personal allowance. But for most people, you can earn £12,570 from any source tax-free. Now, there is also a specific personal savings allowance, and this is only for money earned from savings interest. Remember, you don't get taxed on your savings, it's only the interest your savings earn that are taxable. Now, the personal savings allowance, what you get depends on what rate of income tax you pay. If you're a 20% rate taxpayer, you get a £1,000 personal savings allowance. If you're a 40% rate taxpayer, you get £500. If you're a top rate of taxpayer, you don't get a personal savings allowance. So think about this for a second. If you're a basic rate taxpayer with a £1,000 personal savings allowance and you've got 20 grand saved at 5%, which would be slightly higher than top rates at the moment, but it's easy maths, well, that would generate £1,000. So all of that interest would be tax-free. So you actually could have quite a decent amount in savings before you're paying tax on it with £1,000 of interest tax-free. And it's worth noting, money in a cash ISA doesn't count towards the personal savings allowance because that's its own tax-free element as well on top, which is why putting money in a cash ISA means you can save even more without the interest being taxed. So they're the simple ones. Now let's do the more complicated one. The starting rate of savings tax. Now this is specifically only for people on lower incomes. It only applies for people whose total earnings from all sources are less than £18,570 a year. In that scenario, you get a £5,000, up to £5,000 starting savings allowance, and it works like this. If you only earn £12,570, the personal allowance from all sources, you could then earn another £5,000 of interest from savings tax-free. But for each pound of earned income from work or pensions that you have above £12,570, you lose a pound of your starting savings allowance. Simple numbers. You earn £13,570, that's £1,000 above your normal personal allowance. Well, your £5,000 starting savings allowance is reduced by £1,000, and you get £4,000 that you could earn tax-free under starting savings allowance, but you still then get the personal savings allowance, another £1,000 on top. So all in all, we wrap those together for someone on low incomes, and if you were in the perfect circumstance, you had £12,570 from earned income, you would then have £5,000 the starting savings allowance and £1,000 the personal savings allowance on top, because they all go on top of each other. You could earn £18,570 a year tax-free, with £12,570 of it coming from work or other sources, and £6,000 of it coming from savings. I hope that makes sense. The main two for most people are the personal allowance and the personal savings allowance, but for those on lower incomes, it's worth reading the starting savings allowance guide that's on Money Saving Expert just so you really understand it.